fresh fallout this hour following yesterday's siege on the U.S. Capitol. Twitter, Facebook, and Snap all blocking President Trump from posting to his accounts. Let's get to Julia Borson with the very latest on the story. Julia.
Melissa, Facebook taking the unprecedented step of indefinitely blocking President Trump from posting at least through the inauguration. Mark Zuckerberg saying Facebook had allowed Trump to post because, quote, "We believe that the public has a right to the broadest possible access to political speech, even controversial speech. But the current context is now fundamentally different, involving use of our platforms to incite violent insurrection against a democratically elected government." This comes after Facebook drew criticism for not quickly enough shutting down a group called Red State Secession that posted that its members should be prepared to use force. Snap, which stopped promoting Trump's account after he incited violence back in June, yesterday blocking that account indefinitely. Now, Twitter, for the first time, locked President Trump's account for 3 tweets that violated its policies on inciting violence and misinformation. Twitter confirmed that Trump did delete those tweets, which started a 12-hour clock before the account could be unfrozen. Twitter did warn, though, he would be permanently suspended if he continues to violate Twitter's policies. YouTube, which is under fire for spreading misinformation, has removed the president's videos and said it's going to suspend any channels posting new videos of voter fraud claims rather than giving those channels a warning. Melissa, one thing is for sure, these companies will continue to find themselves in the crosshairs, particularly for the role they may have played in yesterday's events.
Julia, thank you. Julia Borson. For more on what this means for the social stocks, let's bring in Fast Money friend and Loop Ventures founder, Gene Munster. Gene, always great to get your thoughts. Twitter was down almost 2% today. Why do you think that was?
It should be. I think at the end of the day, the same truths are still in place here, is that investors are slowly piecing this together, that these platforms are toxic. We've known that for a long time. They're also addictive, and I think that that plays into why they keep growing their base and their usership. But specifically around Twitter, I think some of the actions that they've taken surprised investors. The stock has had a bigger move more recently. And I think I just continue to anchor this topic more broadly, whether Facebook was up 2% today or if it ended up being down 2%. It doesn't change the big picture here. And the big picture is pretty straightforward, is that consumers are going to continue to aggressively engage in these platforms. The reach is unprecedented. Their ad business is going to be, they're going to be wonderful ad businesses. But unfortunately for Twitter, for Facebook, is that their multiples are going to be progressively pressured. Mm-hmm. And the reason is that investors are going to get tired of this. This is deja vu. I think this topic comes up every 3 months. And eventually, because of the topic reoccurring, it is ultimately begging a much bigger question for all investors around these social companies. What are they doing that's transformative? And I think if you look at Facebook and look at Twitter, they really haven't done anything. I can go more into it. And I think that that ultimately is going to weigh on the multiple, whether it hit Twitter today or whether it will hit Facebook tomorrow. Doesn't change the big picture, is that these companies' multiples are going to be under pressure in the years to come.
I'm curious, Gina, if you think these platforms, as evidenced yesterday in the actions they took while the events were unfolding in the nation's capital, if they were playing the role of publisher already, and what more could be legislated to make them take a harder stance earlier than what they did yesterday as things were progressing?
It's the catch-22 that you and the traders have outlined over many months. Is they really, this is the problem, is, what more could have they done? The more you do, the more, I think, pushback you get from people who feel there's censorship. This gets back to the arbitrator of truth question, the catch-22. If they regulate it, then they become a publisher. If they become a publisher, then there's new regulations that come on. And I think it's very straightforward in my mind, is that social, structurally, it's broken. And that doesn't mean that these companies can't grow their ad businesses, but I don't think that there's a lot to do. And maybe just to actually bring it into a forward thought, is that what that means is we're going to continue to be in these deja vu moments around these platforms for a long time. And what I suspect is that eventually they're going to get more regulation and they'll have better rules. It'll take a couple years to get that clarity to it. And if people don't feel their voices are being heard, they will go to smaller platforms. This tribalism is going to fracture into smaller platforms. those platforms will grow, and then they'll be patted down with more regulation. And I think it's just going to be whack-a-mole.
Gene, Facebook's going to report on, I think, January 27th. I'm certain it's going to be a ridiculous quarter. Again, ridiculous in a good way, but something we've talked about, and I think it bears repeating now. I've thought, correctly or incorrectly, that the existential risk here is falling under the auspices of ESG investing. How much more relevant is that now, given what's happened over the last month or so?
It's taken a step forward. I think it is definitely more relevant. I think that that's part of the reason why you have seen companies like Facebook underperform the NASDAQ in the past year. And so it's just going to become a bigger topic. And of course, that weighs on the multiple, too. We are going to hear more about that. Every time this topic comes up, socially relevant investing is going to come up as well. And so I see that as a structural headwind to Facebook and to Twitter.
Gene, thank you. Good to see you.
Thank you.
Gene Munster at Loop Ventures. Dan Nathan, what did you make of Twitter's price action, particularly relative to the other companies?
Yeah, I think it's going lower, and I think that Gene hit on a couple things. And he said, "What did they do?" In late October, early November, when the stock was down 20% from, in one day after their Q3 earnings, because the company is not innovating, and they weren't growing their daily active users. And they did see a rebound in ad growth, but they had a massive pull forward in Q2. They had 20 million users that they added. So if you tell me, if they kick Trump off and after the inauguration, all the MAGA people leave, are they going to be able to add users again? Are they going to be able to monetize the users that they have at a rate that justifies the valuation? And I guess the last point I would just make on that is, this is going to be a very toxic situation. It's bipartisan here. So Jack Dorsey and the crew there, they had a very, very tough decision here. But I pulled the plug on this one. I just don't think there's a clear path for them forward to justify the valuation. The last point is, this is not a hyper-growth company. They've grown their sales on average over the last 5 years, probably low teens or so. So the hyper-growth period for this company is over, and they don't have more than 200 million monthly active users here, daily, however they measure them anymore. So, this thing is kind of toast to me.
Shepard Smith here. Thanks for watching CNBC on YouTube.